you see the future of mining pools. And now that there's increasing competition, as you touched on, these mining pools are going to have to find different ways and different revenue streams to become profitable. It could be the firmware, it could be financial services. Is there anything else there that we didn't touch on that you think might be adopted by certain mining pools, or something that is important to be aware of as we get further along?
I think the end game for mining pools is basically do as many things to help miners as you possibly can. So there are other things that you can do besides the firmware and the financial services, like running hardware broker services or just being very well connected with hardware brokers and facilitating some of those deals. The fact that we as mining pools are connected with miners all over the world means maybe we have a little bit better knowledge about where is some open capacity for hosting, or where there's some energy sources that are untapped that could be used for mining, or things like that. Or even just like personal connections with talented people that can fill roles around the industry. Like mining pools can be the ones providing all kinds of those services that help the actual miners with things that maybe it's not so related to the mining pool itself, but it's just like an externality of having a bunch of clients around the world that you're communicating with, that you have that extra value you can provide. Even in our case, we have a very small content team, but content for large miners hasn't been a very big focus, whereas it's been a focus for us, at least for the last couple of years, because there's so much misinformation about mining that we really wanted to help people who are outside of the mining industry understand things better, understand what's going on. And now that more mining pools and mining businesses are in the US and Canada and Europe, that's not quite such a pressing need as it was before, when it was all concentrated in China. But nevertheless, like, we've developed this content team, and we understand how to educate people outside of the mining industry on what miners are doing. And we can even offer that as a service to large miners, that like, hey, you guys don't need to worry about like your public communications as much, because we can help you with occasionally producing some content to let people know what you're doing and make it really digestible for people who aren't deep into the mining game. So it's really tons and tons of possibilities for mining pools to continue providing value, even after the pool itself is no longer able to differentiate from other pools, because all pools will eventually have pretty much the same features and offer super low fees, that there's not going to be much to differentiate there. So it'll really be all those supplemental things.
What do you think is going to happen in the mining industry over the coming years? Because you hear all this talk about, more obviously, a lot more capital is coming in. You're seeing these big energy players coming in and saying, okay, well, we got to learn and understand this just because the incentives line up properly and can help us reduce waste. And so you see this convergence of like money, intellectual capital, larger traditional industries in the energy sector coming together. And it kind of seems like we're building up to this like explosion of even further growth. I know it sounds crazy to say because there's been so much already, but it seems like we're just starting to hit yet another tipping point with all the announcements and everything happening. Like what are some of the things that you're seeing?
I think we're literally just have the tip of the iceberg in when it comes to how much and how big the mining industry is going to explode. You know, all the institutional money that's coming in. I think what's a really big focus is not only the institutional money, because, you know, back in the day, there was always some institutional money coming in and private money coming in from larger hedge funds. But what's amazing is to see the average, everyday, I'll say, you know, middle-class American having the opportunity to invest in the crypto space, right? There's many companies like my own, like yours, that, you know, are allowing people to buy one individual miner and one individual space. You know, being able to operate it in a state-of-the-art facility, I think that's really going to change the game for the mining industry, right? It knocks out that barrier to entry. You know, it knocks out, you know, I need $5 million or I can't mine. You know what I mean? And I think that's what's truly going to explode the space, you know, and honestly change the investment, you know, world as well. That's what I think is really going to, you know, expand the industry.
How do you see these other blockchains outside of, you know, the big cap like Bitcoin, Ethereum, and all those? How do you see smaller blockchains continuing to evolve in that type of a world.
Well, Library is its own blockchain, so I'm kind of obviously going to not express the pure maximalist perspective. I think there's sort of two sub flavors of maximalism, one of which is literally insane and one of which is somewhat defensible. So the insane one is that everything will be done on Bitcoin, and that's just insane, right? Bitcoin has already kind of said that it's going to be going towards small blocks, maximal security, and it's just not feasible, especially if you're talking about there being blockchain versions of everything. It's just completely infeasible. I mean, I'm skeptical of even the Ethereum version of this. Potentially they'll be able to do it with sharding, but like Bitcoin literally has, and all blockchains have, one of the worst properties that you want to see as a startup person, which is it has increasing marginal costs with popularity, right? The more popular it is, the more expensive it is to use. That is the opposite of what you want in any successful endeavor, right? And this is a really big question that we need to be answering. I think this shifts, this therefore means that you will see blockchains more tailor-made for specific use cases. They can be more efficient. They can be more designed for doing specific things. And then, you know, interoperability can later be added, or interoperability can just happen at the layer above it. Pure blockchain to blockchain interoperability doesn't even necessarily need to be there. You can have a level above that provides the interoperability. Although certainly ways of doing it blockchain to blockchain are interesting. Now there's a flavor of Bitcoin maximalism that says, well, one blockchain is going to win the market for sort of store of value reserve aspects. I find this to be a defensible position. I'm not convinced that it's correct, but it's possibly correct. And I think it's correct enough that I buy Bitcoin because of it, right? From an expected value perspective, like it's plausibly correct. And if it's correct, then Bitcoin will be very valuable. And so I think it makes sense to at least have some Bitcoin because it's possibly correct.
Yeah, I would say that I fall into more of that camp as well, where I don't think it's just going to be only Bitcoin. I think that there are obviously other applications for blockchain, but it's all speculation, I guess.
Yeah,
at this
we're
point,
not competing with Bitcoin. Like Bitcoin's not a competitor to us at all.
Yeah.
We're trying to build a blockchain that takes the properties of a public blockchain and uses it to store metadata about content and identities about publishers. Bitcoin can't remotely do what our blockchain is doing. If we had done it on Ethereum, it would have been an incredibly expensive nightmare and not worked, right? And so it's like, it's really hard to argue that we would have achieved the success that we've had doing it in any other way other than having our own chain. And so it's like, the only reason to expect that something like Library, like there's no reason to expect we're going to get out, like no one's close to us. None of these other blockchain ones are close to us in popularity, et cetera. And whenever we survey it, like there's nothing that we could switch to that would have the same properties. This is another, I mean, this is going to kind of like nuanced and technical, but like a lot of these people who believe in the promise of all of these like smart contract platforms or like these coins where it's like, you can do anything on this. Actually, you can't. Like when you dig into the reality of what it would be like to, because we've done it and I've looked at them and like, no, you can't. You can't actually do what these people are saying because when you dig into what you actually need to do to build a web app that can compete with Web 2 apps, like a smart contract, at least a smart contract in terms of when I say smart contract, it's a contract that can execute, you know, on chain and resolve itself. That's not sufficient to build what we've been trying to build as an example.
Yeah. And it's interesting to see how this technology is getting applied in many different ways. I mean, you can look at someone like Jack Dorsey, right? Someone who is running or was at the top of the game with Square, and all of a sudden, like making some of the changes that he did, even changing that name from Square to Block and everything he's been talking about with applications of Lightning, funding developers. It's pretty clear that he's looking at the puck going in this direction towards decentralization. And I think he's more so focused on Bitcoin, but there are a lot of people that are looking at this technology, figuring out ways to apply it.
Yeah, I think Jack, by his position actually of being Twitter CEO more than anything else, was forced to deal with the United States federal government in a way that like let him really see how it operates. And it actually really increased his skepticism of it. Mm-hmm. And I think that his opinions and perspectives have changed. And I think that's part of why he's gotten so big about Bitcoin. I think he resents the position that he was put in. And I'm not a 100% fan of Jack, I'll say this, but like, I think he resents the position that he was put in by being the CEO of Twitter and resents the position that he was put in by his users, his employees, and the government. I think he resents all of them to some degree for putting him in the position that he was put in. And I don't necessarily defend the decisions that he's made, but it's when he was put in some of those positions. But I think it is clear that like it has woke him up to some of these realities.
From the mining side, like how do you think that this is going to progress? Like where are we today with the financing for miners? It's definitely different than it was like 3 years ago or something, 4 years ago.
Yeah, 3 years ago it was impossible. Or pretty much impossible. I mean, we did some financing, but it was very expensive. You know, it was like 18-20% considered like credit. You could put it on your credit card for the same kind of thing,
as well
right?
Get like an Amex card.
Yeah, but what happened when Bitcoin shot up to $60,000, stayed there for a while, and financial institutions started getting in there and, you know, buying it and getting more familiar with it. It really helped the public companies because the public company valuations went up. And that allowed them to go to the markets and raise money. We raised money. Pretty much everybody raised money. That's one of the good things about being a public company is you have this opportunity. You know, you don't want to upset your shareholders too much with dilution, but at the same time, to grow a company, you need cash to do it. So that ability to raise money really changed the narrative because now Bitcoin miners could go and buy product. So we could go put to MicroBT and Canon and Bitmain and others and buy it with cash and not need financing. But also because we were creating more Bitcoins and we had cash, we weren't desperate to get financing like we would have been in the past. We're saying, I'll pay your 20% because there's no other way I can get these machines, right? And so what's happened is financing has come down a lot. And you'll see some really interesting deals in the public companies where they're doing all sorts of bonds and debentures and different things. And instead of paying, 18%, it's getting down below 10%. And I think it's going to continue to work its way down. I saw a deal where somebody did a deal for 8.75% on for some financing for crypto miners who own the public companies. So when you see things like that, it's kind of like, okay, well, this is getting to be okay, 8, 9, 10% for a volatile industry that's not that well known. This is a kind of acceptable number. As it gets, better known and better track record and payments are happening and people are seeing that we can pay our bills, then you see it coming below 8%. So I think it's getting a lot better. The flip side to that is there's nothing to buy. So, this chip shortage is a different side to this and the price of this. And I've been fairly vocal about this idea that if you're buying Bitcoin miners and your ROI calculated out is going to be 2 years or something like that, it's a pretty crazy buy to make especially with investors' money, because a 2-year ROI on equipment that maybe will last 3 or 4 years with technology. I mean, who knows what's going to exactly happen, but if you're spending 2 years just running the stuff to pay it off before you actually are generating real cash and profit from it, these are scary numbers. We try to do 12 months or less on our equipment purchases. And it's because of things like this, when we were buying equipment at $60,000 of Bitcoin, it's like, okay, we can pay off in 8 months on a purchase, at $70, $80 a terahash or whatever it may be. But if it's, $100 a terahash, then you're at, 18 months. And it's like, well, who knows what's going to happen? Because great, if Bitcoin goes up, you pay it off faster. But if it goes down, then you're into 2 years and plus. And so you're buying equipment you're going to run, and you're never actually going to make any money on it before you're looking at trading it out and getting new stuff to keep up with the difficulty. And so when you look at what happened when it went from down to $40,000, $42,000, all your ROIs that you're calculating at 60,000 that were 8-9 months are now 16 months, maybe 24 months, who knows, right, on what you paid per terahash. And so it's a scary business from that point of view. And when you're a public company and you have investor money, you really have to think a lot about what you're buying and how you're buying it and what your ROI is on it. Because at the end of the year, you're going to have an audit, and your auditor is going to look at that equipment you bought. They're going to look at what you paid for it. They're going to look at how much it generated in cash, right? The expenses to run it. And they're going to say, will it in the future create enough cash, right, to cover its cost? And if it won't, then they're going to impair that asset on your balance sheet. And so if you have like $100 million of Bitcoin miners on your balance sheet that you bought and they're all running, but they can only make you $50 million in the future on their lifespan of when they're, the technology side, and the auditors work this stuff out, and we help auditors do this, they're going to take your balance sheet from $100 million down to $50 million. Do you know what that does to your stock? Do you know what that does to the faith of the shareholders if you're the company that had to write off so much value? So it's really important to get this stuff right. And like I say, I'm not saying I'm great at this. I mean, we're all struggling through this because it's such a new industry, but we get euphoric about the price of Bitcoin, and we just start throwing money at miners and equipment and all this stuff. And then 3 months later it crashes down and we're like, oh my God, cancel that, don't do it. And if you just be a bit more pragmatic and say, well, we know it's going to go all over the place. what's our minimum cost to make a Bitcoin? Where do we think the difficulty is going? And does this purchase make sense? Can we pay it off in a reasonable amount of money, knowing it's going to run for 3 to 4 years? And that's kind of the way, I'm hoping that it gets more like that. And that'll help because, the manufacturing cost of making a Bitcoin miner is not near what Bitcoin miners are paying for it. And, if you talk to other Bitcoin miners and ask them, about the price of Bitcoin miners, when the M30 came out, we got the very first order from MicroBT, and it was something like $20 a terahash. The cost to make it really hasn't gone up that much more, right? It's the same chips. They're still making the M30s. It's the same chips, the same fans, the same control boards, all that same aluminum case. But, now it's $80 to $100 a terahash. The manufacturers are doing quite well. I'm sure there's been increasing costs and supply chain issues, but not,
not like
that
4x,
big.
5x.
Yeah. So, good for them. I mean, that's the side of capitalism that works well, right? Make money when you can. I don't complain when Bitcoin's $65,000. I don't say, oh, that's too expensive. I'm going to sell my Bitcoin for $40,000 because 65 is too much. I don't do that, right? I get that, but it is a problem because it does really hurt, large industrial sized miners or even small miners when the prices are so expensive and the future revenue and ROI is so hard to figure out. Going back to sort of the empirical data and what's going to happen in the future, so volatile. It's, there's this concept in a lot of people's mind that Bitcoin mining is like so lucrative and everybody's so rich. It's a hard business. It's like any other business. If it was easy, everybody would do it, right? But it's a hard business, and especially at scale, it's a hard business.
Yeah,
Sorry?
it's like it's one of those things where you have there's so much knowledge out there and so much to learn. So you'll have people come into the space and they might have capital, but if they don't understand what they're doing, then those are the people who are going to get wrecked. It's like you could have $500 million, but if you're going in and if you're buying miners at 6x the price of your competitors and you're locking in a bad power contract, then you're going to be in some big trouble when the market turns around.
Even that, the power engineering of making all the phases work properly, the power work properly, the breakers don't go, all the sizing properly is a big thing. The network engineering is, the networks that we have to run so many individual servers and running them all in through a proxy into a pool and all that, there's a huge amount that can go wrong. And there's a huge amount of security in there too. It's a lot. This is not a garage business anymore. And it's getting more and more sophisticated. It's getting very competitive. It's a very expensive, capital-intensive business. On the other side of it, it's a very lucrative one if you get it right.
Yeah.
And a lot of people look at how lucrative it is, and I don't know if they all look at how hard it is.
They're all looking at this chart, and they're like, "I would have gotten in here." And then
but
some people are getting in up here.
It cost me $6,000 to make one. It's 10x. I'm going to be a Bitcoin miner. And it's like, okay, yeah, well, go, run 10 or 20 machines. Fine. Go run 12,000. Go draw, be like Marathon and run 100,000. This is a completely different world.
So in terms of miner financing, where it is today and predictions for the future, obviously a lot more capital has flowed into the space. You're seeing a lot of companies try and go public via SPACs or just get access to those capital streams. How do you see this playing out for the rest of the year and over the following years as the industry continues to grow, becomes more competitive, more institutionalized? How is all this looking today and over the next few years?
Go back to the tech boom of late 90s. Again, we talk about the internet in 1997. I took a company public in 2000 that was in the Internet of Things space. And I remember being on the road show talking to investors, and they were saying, you got to lose more money. Everybody in the internet is losing lots of money. So you got to lose a lot more money to get more eyeballs. And, we weren't in the eyeball business. And so I found it kind of funny because in 2001, when we did our secondary roadshow for that company and, the internet crash had happened, as opposed to there being 30 other people out raising money at the same time as I was the only one. And they were saying, thank God you guys are profitable. Yeah, what's happening now is you've got all these companies, all this investor dollars chasing Bitcoin mining. There are arguably 23, 24 publicly traded or on the 18 now listed and 6 more on their way, whatever the number is, Bitcoin miners, and they're not all going to survive long term. You've got a lot of capital, arguably, somewhere in excess of $15 billion that's gone into the space in investment capital. And as people continue to need capital to grow, it's going to really be you've got to be a quality company with a good business. It's going to be a lot harder for the company that has 1,000 miners today and says they're going to have 100,000 miners next year, and is going to have to go out and raise money to do it, because an investor is going to have a choice. I can either go buy stock of one who's already public, or one who's, got scale and stability and low cost, or I can bet on somebody who says they're going to do it, but they don't have orders yet for miners and they don't have hosting, et cetera. So I think you're going to start seeing a maturation of the capital markets, and it's going to get harder for newcomers unless they have a unique angle on what they're doing. Free energy, they've developed their own miner. And so think about the constraints in this industry. It's access to power, access to hosting, access to miners, and then what prices you're paying for that. And if somebody has a unique spin on it, then they'll be able to raise capital. Not unlike in the technology industry, if I were to come up with a new way to do online search, I'd have to prove to somebody that I'm 10 times better than Google at it and that I could somehow be successful. I think for the automobile industry, which is a very mature industry, if you're an upstart, there have been very few upstart companies that have succeeded. Tesla's, a unique case, for example, of a company that's brand new to such a mature industry, but they're leveraging a disruptive technology to do it. And I think over the next 3 or 4 years, larger miners will kind of become more and more established. And you'll have, like in any typical industry, 4 or 5 large players, a handful of medium tier players, and then a bunch of small niche players. And, somebody will come up with something disruptive and eventually displace us. Who knows? That's the way these markets work. And I'm super excited to see all of the technology innovation that's going to be driven by all the capital that, we're all generating as miners, because we're not selling our Bitcoin. We're going to do something with it. We're going to reinvest it, and it'll all be in next generation technologies.
How you think that the next, year plays out within this industry? Everyone's looking at how the different cycles and previous halvings have played out, and now we're kind of looking at what's coming next, and that's all within the context of all the craziness that's happening with COVID, just the global financial system. So I'd really be interested to hear your take on what's going on right now.
When I got pulled back into the Bitcoin mining world with my brief sabbatical there, it was only like 6 months, but again, that's like 3.5 years in crypto, right? So I pulled back in after 3.5 years, crypto years of being absent. And then now I'm like, okay, it's just another FOMO cycle, right? People are just losing their minds. They're paying. I sold like my S9s off for I basically gave them away. And then I had an S19 on back order that was just coming. I was going to play with it. It was like batch 1 S19. And I had a bunch of credits in my Bitmain thing. I got it basically for free, but it was like $2,500. So as soon as I got it, I sold it for $3,000. And I couldn't believe it. I was like, you're going to pay $3,000 for this? Okay. But now, if you know anything about S19s, they're going for like $11,000 right now. That's insane. And so I just naturally thought it's got to be FOMO, right? And maybe it still is. A lot of these guys that I just described as Yoda or Grandmaster or whatever, even I'm hearing from them that they're all kind of starting to say that this time is different. I'm almost at 50% starting to believe that this time is different. Maybe it's not, maybe there's still going to be a pullback, but definitely feels different. And when I'm out in the field right now, we've got the Blockyard has teams in a couple of different locations around the country right now working at these 25 plus megawatt facilities. And I mean, there's a lot of capital that's been deployed that isn't just going to go away during a bear market. So that tells me there's going to be some kind of solid support level that we haven't seen in like we had in the past. Like in the past, I had a 0.5 megawatt mine. Probably it was either the largest in South Carolina at the time or one of the largest. Like I don't think there was a lot of competition. I think there might have been one up in Greenville that I heard about. It might have been in the 5 megawatt range, but I was a pretty big mine for 0.5 megawatt. That was decent. Now you're just like, that's nothing. That's a drop in the ocean. Now you've got just 25 megawatt farms just popping up there everywhere. So like, that's not going to go away too easy. If you know how hard it is to build a Bitcoin mine from scratch, you're going to put in a lot of time and energy to build that. You're not just going to walk away from it when the market hits. And even if you're 6 months out of loss mining, I don't think you're walking away from it either, especially if you're a publicly traded company. So that the whole dynamic has changed. I mean, I'd like someone to do research on like how many publicly traded mining companies there are, because I think those are the ones that are going to probably weather the storm. There's got to be over 10, right? There's got to be probably around 20. And if each one is like to build a 25 megawatt, I mean, that's tens of million. I mean, I can't even imagine. It's got to be at least 20 million. I don't know. Like, I don't have that kind of money. I just work for them. So I know what they pay us. I'm telling you, that's a lot of money to walk away from. So in that sense, this time is different. I think there'll be a lot more stable bottom to look at. Now, I guess that would open up a whole nother question about economics of Bitcoin mining. So like what creates these bottoms, that kind of thing.
Yeah.
I don't know, but I better
actually
stop.
just to take a step back and make sure I'm following you properly. So what you've noticed is that there's just so much more capital coming in. So a lot of these people are saying that this time is very different and that the floor is going to be much higher because there's so much capital that's into the mining that is going to hold up a higher floor. Is that right?
Yeah.
Or am I missing anything?
Well, like the thing is, like the cycle, the bear bull cycle has happened 6 or 7 times now, maybe even 8, and it's always the same pattern. It's kind of like there's a micro pattern inside of an adoption curve, and like an adoption curve being the adoption of any kind of technology, like a microwave, for example. It starts out here slow, but it exponentially, but then it levels off. I don't know if I'm in the screen or not, but it levels off, and Bitcoin is kind of like that, in my opinion. This is not financial advice, by the way. But my opinion is it's like an adoption curve. But inside of that, you have micro adjustments, and that kind of follows the whole loop thing that you see, like these waves. It's really interesting that occurs in a wave form as well, which is kind of interesting because most things are in wave forms, and the fact that Bitcoin is functioning as a wave. It's a wave function. It shows me that it's mostly mathematical. And so I kind of approach things mathematically like that. And if you do that, you can extrapolate out and make price predictions. But it's really, what's hard is to understand where the variables are. And so I was plotting when I was mining. I don't do this anymore because it's kind of time consuming, but I had a chart. I did about 18 months of plotting. And every day I would come in, it was part of my morning routine, where I would check on my phone what the spot price of Bitcoin was, and I would plot what the price per terahash, what I was earning per terahash on a daily basis. For example, today it's 26 cents per terahash is what 1 terahash earns in a 24-hour period. And then I would plot that, and then I would put the date. Then I would put what my electric cost was, where my meter was. I would do a manual meter reading, and I would just track it out. And then I would turn it into charts and graphs and try to extrapolate out, like, where would we be in 4 years after the next halving, which was like right now. And I don't think I was accurate, but I feel like I was on the right track because I kind of predicted it to be like around 260,000 right now, and then crash to about 40,000 over the next 2 years, I think is what I was thinking. But I don't know if that's going to happen because that was based on the information at the time. But I think if there's like this other guy that I like to follow, pretty genius actually on his charting. In my opinion, he's genius because he's like invented all these metrics and he knows like on and off chain analysis and stuff like that. His name is Willy Woo. Have you heard of him?
Yep.
Yeah, that dude is genius. And there's another guy, Jimmy Song, who I had the pleasure of meeting a couple times. He's actually given me a couple referrals that I could hire, that I have hired. Those guys, they're pretty good with, but Willy Woo in particular has really come up with some interesting metrics, way beyond what I could ever do. So, but I like the way that they think about that stuff. So my opinion is such that I look at what the terahash is earning from a mining perspective. So if it's 26 cents a terahash and you've got 100 of those, you can just kind of predict where that goes. And then basically what you ask yourself is like, during a bear market, what is my earnings per terahash going to be? Or you could also say, okay, given difficulty adjustments of 10% per epoch being 2016 blocks, where do we see ourselves at the next halving? Where do you think that price, that earnings per terahash is going to be? And you can easily figure that out just using math. Like take 26, cut it in half, but you've got to also think about where the difficulty is going to be based on the predicted amount of hashing power that's going to be on the network at the time. So it really is a pretty easy math problem. If you have a spreadsheet, you just kind of figure it out and then give yourself a deviation of whatever you think is reliable, 10, 20, I don't know. And you can come out to probably $1 to $2 million per Bitcoin but after the next halving, after the next bull run, but then you'll probably have a pullback. And see, that's kind of where the pullback is, like traditionally been like 80% pullback. That's what I think some people, like my friends, are saying that's going to be different. Like it's not going to be an 80% pullback. Like it's going to be more like 50 or 40% pullback.
Broadly speaking, than just the company, the crypto industry within Canada. And then following off of that, we can dive into how Canada is different than some of the other countries out there.
Yeah. I mean, look, we have, the whole process of becoming regulated and registered at its core has the investor interest in mind, right? Everything that we put in place, again, I talk about the policies and procedures and all the controls and all the insurances and the custody, is all done such that when an individual invests in Coinbase, they know that their assets are safe, they know their assets are secure, and they know that, there's a regulator overseeing how the company ultimately functions and operates to make sure that investor assets are safe and secure. So I want to make sure that, it's like the reason why we went through the regulated process or the registration process is because at its core, that at its very sort of essence, that is exactly what we want to achieve. We want to achieve safety and security for our clients and our users, right? And again, and to sort of balance that with the convenience of using a platform, which is, we're available on the web, on Apple, on Android, and ultimately to balance those two, right? Because, and this is going to be sort of my lead into your second part of your question, because ultimately with regulatory oversight, with safety and security, you will eventually get mass adoption. You will not get mass adoption without having safety, security, convenience, and regulatory oversight in an industry that's such as ours. I strongly believe that. You will always have individuals that are, that like to push the boundary. You're going to have users that are early adopters. You're going to have, early innovators that are going to always, be creating new technologies and going to be very open to experiencing and new technologies and new products themselves. But when it comes to the masses, people need safety, people need security, and people need convenience. What I believe is going to happen in this industry in Canada going forward is ultimately we are going to see, enforcement from regulators continue. And we already have the Ontario Securities Commission start enforcement actions on certain international crypto exchanges that were operating in Canada, without being registered. We've seen Binance leave the Ontario market. KuCoin left the Ontario market as well because of the enforcement actions that the OSC had commenced. And so ultimately, I think that's, and in the long term, I think that's to the benefit of Canadian investors and Canadian residents, because you do want platforms that have a certain level of controls and policies and procedures in place. And if you don't, these platforms are here today and not here tomorrow. That's what's going to happen, no matter how big they are. I mean, we've had some massive exchanges that have been, have been hacked, that have gone under in Canada and internationally. We had some pretty bad experiences in the Canadian crypto space with, some exchanges that folded and made a pretty bad name for the industry. So I think it's very important for us to turn that page, and I'm happy to see other platforms, get registered in Canada as well. And ultimately, I think what that's going to result in is a consolidation in an industry in Canada. You are going to have smaller players that are simply not going to be able to get to that level of operational maturity that they need to be at in order to continue operating and to be registered. And you're going to see a roll-up in the industry. You're going to see consolidation. Companies such as Coinbase and others that are at that level are going to slowly amalgamate and acquire the smaller players. And you're going to see a handful of more sort of mature companies remain. But I think that's very good, because with platforms that are regulated, with mature platforms that are available, you're going to see more institutional interest as well. Because there's a lot of institutional interest that's currently sitting on the sidelines that they have mandates to only operate with or work or invest through regulated and registered platforms, and until recently they haven't had an opportunity to do that. So with a company such as Coinbase that's now able to offer a registered platform that's safe and secure for institutional investors, I think you'll have more of that interest as well.
If you remove the inflationary nature of the monetary system and you overlap that with deflationary nature of technology, what type of trends do you see moving forward if that was to come to fruition?
Okay, so most people that are worried about kind of when you hear deflation and it's the bad word, what they're really talking about deflation on a credit system, especially with too much debt, is a really bad word. And so the credit-based system requires, embedded in that obligation of a credit-based system is that it grows forever. And so again, going back to climate change and everything else, we have a system that is required to grow forever on a finite plan. So you can realize just in itself, that's ridiculous. Credit-based system requires growth forever, because if you allow lower prices against that, let's say today, and it's way more than $250 trillion of debt, if you let lower prices happen against that debt, everything gets repriced immediately. Imagine house prices falling to what they should be. Imagine, and all the debt that against the house prices, or business value being repriced to what they should be priced at versus. And so the corresponding collapse takes you into a deflationary depression, like the 30s, but on steroids, because this would just keep on unwinding. So the system itself can't change the system, no matter what political actor, left, right. So here's an interesting thing. Most of the revenue for government does not come through taxes. It comes through inflation. And so, but all government, so what's the difference between Republicans and Democrats? If most of the revenue comes through a hidden tax on people that both are using, so this, on top of the system and the divide of society, is not talking about what the root cause of it all is. And both are, it doesn't, so if you can essentially press a button and take somebody's 40 years of saving down by pressing a keystroke, is that okay? And so if you have corruption in money supply, you have corruption everywhere as a result. So all money is a trade of our time. We don't want more money. We want more time. And so if you allow corruption of money, you allow corruption of time. And so what you're seeing in society is that play out. But what's worse is it's playing out, and it's getting exponentially worse because technology is going one way exponentially. And as a corresponding byproduct, the corruption has to go the other way exponentially. And so, but that system cannot allow deflation. And why? Because every institution that we live in, that's why I said it's really hard to understand when you live in a system that is doing that, to actually understand what a different system would look like. Because every system is sitting on top of that. So would you vote for a government that would say, listen, I'm going to bring sound money and everything is going to collapse, including schools, pension plans, government itself, hospitals, the entire thing would unwind, and all the money that we thought was there, that was really just credit, evaporate, and it's gone. You might as well light a fire to it, because it was never there. It was there in the form of pushing up asset prices and pushing up prices forever and ever with more credit. But we don't see it that way. So it would just keep on collapsing, and you would have anarchy. It would look really, really ugly. So realizing that system can't change itself, you need a transmission mechanism from one system to another system. And that's what actually I believe Bitcoin is. So Bitcoin is a system that, because of the hard cap of 21 million coin, it allows for deflation over time. So what people would realize in Bitcoin is it's actually maybe not price going up, it's everything else relative price going down against Bitcoin. So if your monetary unit is Bitcoin, and what you'll see is everything priced in Bitcoin, maybe forever, is going to come down in price. And so you'd see what's happening. But you need, so to make one transition to another system, you need a whole bunch of people starting to use this other system. And in my hope, and why I talk about it this way is it's really important. If you don't own any Bitcoin, I would suggest you get off zero. I'd suggest you learn more, not for the money that you could make on it, for what it could produce, what it could help your family, because the system cannot change itself. It requires, and if you think about business examples, Blockbuster doesn't change, right? In fact, they turned down buying Netflix for $50 million because at that time, Netflix business model, download speeds were too slow. It didn't work, right? And what Blockbuster missed is technology at the rate of technology moving, and what downloads speeds would do means we don't need 9,000 stores anymore to watch movies. It changes in an instant on technology. And that same thing is happening everywhere. It's happening on all these trends. That solar example is, once price drops to a certain level, you don't need your electrical company anymore. If you forecast these trends out and what it means to us individually, and what we would do when price drops to a certain level and gives us more for less, we make a choice a rational actor would make. And that changes it doesn't matter what the system wants, changes the system.
So that's it for today's episode. I'm excited to tell you about Saz Mining's waitlist that just opened up. If you want to own your own Bitcoin miner that's run on renewable energy, go check it out at Saz Mining's website. You can actually own your own Bitcoin miner and have Bitcoin that's generated from your miner deposited directly into your Bitcoin wallet. So thank you so much. Go check it out and check out the next episode of Saz Mining's podcast. Thanks.